Yeah, I'm curious. You mentioned seller carry. How do you help them figure out what terms they should be doing? Like, what questions do you ask?
Yeah, so most people want to do like no money down and like no interest rate.
Yeah, how do you make it fair for the seller and obviously for the client?
And that's the only way you can do it is you have to make it a win-win. So like when we're talking to a seller, we're never pitching seller carry on the front end. Like we're really asking them like, what are your goals and what are you trying to accomplish? And then I know which deal structure will fit at that point. So it really depends on what they're looking for. With an investor too, a lot of people, they want a good deal.
Of course.
So it's walking them through like, what is a good deal to you? And a good deal to me, it could be a terrible deal to Jordan,
Right.
you know?
Yeah, exactly.
So it's really figuring out what is a good deal to them and why, and then, you know, taking it from there. Because most people just don't have specific criteria, aren't thinking about it fully. They just want to buy real estate, which is sick. Like that's a good way to start, but you have to think about like, are you investing for cash flow? Are you investing for like a value add?
Hey guys, welcome to episode 48 of the Realized Gains podcast. I'm Stephen Tran. I'm an Oregon and Washington realtor, and I invest in multifamily and short-term rentals.
And I'm your co-host, Jordan Lee, mortgage lender based here in Portland, Oregon, and I'm licensed in about 9 states. And I invest in single-family homes as well. And we had a super interesting episode today. Stephen, who did we interview?
We interviewed Trevor Howard. He is a realtor with SMI Capital and a big-time investor.
Yeah, and it's great because he's 27 years old and he already has just like a ton of experience under his belt. He talks a lot about creative financing.
Oh yeah. So he talked about seller carry, combining traditional financing with seller carry. He's built up an amazing portfolio with partnerships. Talks about a lot of his experiences there.
Yeah.
Some good stories, some bad stories. Totally.
Yeah, he talked a little bit about wrap mortgages as well. So if you're interested in creative financing, how to like get into deals with low money down and just like the mentality, the mindset of structuring deals based off of the debt instead of based off location, this is a podcast for you.
Hey guys, welcome to episode 48 of the Realized Gains podcast. I'm Stephen Tran.
And I'm your co-host, Jordan Lee, and we're super excited to have Trevor Howard on the episode today. Hey, Trevor, do you mind just like giving us a quick background of, you know, how you got into the industry? Like, are you from the area and kind of your journey into real estate?
Mm-hmm. Yeah, how in depth do you want me to go? I guess just
pretty in depth.
Yeah, we want to hear it all.
All right, cut in whenever. But so I started as an engineer. I went to Oregon State, grew up in Salem. Got a degree in mechanical engineering, working the 9 to 5, knew nothing about engineering.
Okay.
Or nothing about engineering.
Did you say mechanical engineering?
Yeah,
okay.
Mechanical. Knew nothing about real estate to start.
Right.
Have you heard of FIRE? Like Financial Intensive
Yep.
Retire Early?
Yep.
Okay. Yeah, so I came across that just sitting at my desk, like listening to podcasts. It's like, oh, this is super cool. Like, you can do something other than work. Like, you know, stop working early. Never heard of it before. Was kind of listening to that. They were recommending finance books on there. Started reading some of them. Eventually came across Bigger Pockets.
Oh, wow.
Heard about investing in real estate. It was like, wow, this is crazy. And they're, you know, talking about big things by doing all sorts of deal structures and all sorts of investment strategies.
Right.
Heard the episode on like house hacking. I was like, oh, that was something like I could do that. Learned for like a year after that. Kept listening to everything.
What year was this?
Oh, this was, I was like 22 years old at that point.
And you graduated from
2018.
In 2018.
Yeah,
okay.
so that was
recently.
like, yeah, so that was like a year or two after that ish.
Okay.
So I was 22ish. I'm 27. I'm pretty sure.
And you
right
got a job in mechanical engineering right away, like no problem, right?
Yeah. So that's the cool part about engineering. Like once you get that degree, like it's super easy. You make decent money. I was making like 52 grand-ish to start, and then by the time I quit, maybe like 70. So it was like solid money for fresh out of college. But it just sucked. I mean, you're just sitting at a desk all day. Dude.
We've been there.
Yeah. But heard about real estate through that. Started house hacking, and it was like, and I was living frugally at that point, dude. I was living off like 12 grand a year, saving every penny I could, like making all my meals, doing that whole thing, following the FIRE movement. Bought a house hack, was living for free at that point while making a couple $100.
Oh, like right away?
No, so I listened for a year to Bigger Pockets. I listened to every single episode.
I mean, you were living for free right away as soon as you bought the property.
Oh, yeah, that house.
You bought like a single family and then just rented out the rooms?
Yep, so when I was looking at those originally, it was like you could buy a 3-bed home. It was in Gladstone. You could buy a 3-bed home for like $400, or I could buy like a 5-bed home for like $450. I was like, oh, my payment's like whatever, $300, $500 a month more. But I can rent it out for $700 a room. I was like, math checks out. Cool.
Yeah.
Did that, was living for free in it, maybe making a little bit on it. I think I was making a couple $100 even on it.
And how hard was it for you to like, I mean, I know on paper it's like, okay, yeah, you just buy a house, like get your roommates. How hard was it for you to like stabilize getting roommates and doing that part?
Yeah, so I mean, I was shitting my pants, dude. The first deal, like that was the smallest deal, like, and it only took $14,000. I was shitting my pants, like it was the scariest thing I've ever done. But for that first one, I was already living with my friends who were all engineers, so I was like,
oh, so these were already built-in roommates.
It was already built in
together.
Yep,
okay.
we were all renting together. I was like, hey, do you guys want to pay like $100 less each and like live in my house? And they're like, sure. So I was like, that was my test run. I was like, this is sick. Kept learning about it. And then I was like, okay, I don't know. Like, can I get other people to live here? I don't know. 10 months later, because you have the 60 days to move in and whatnot. So I realized I could buy a house in 10 months, and then I had 60 days to move in, and I still live in my one for the year.
Right.
After reading all my loan docs, I was like, oh, sick. Okay.
Wait, say that again?
Yeah.
After reading all of your loan docs, you read all
I actually read the loan.
There we go. Especially the note. Like you said something very important there. Which is, you're supposed to move in and stay there for 12 months, right?
Yeah, you intend to
live there for 12 months, but he actually read the deal and it's like, oh, well, I can buy a new one and in 60 days later.
Yeah, so I was asking the lender, I was like, wait, does that mean I can buy one like early, like before the year? And they're like, yeah. And I was like, okay, cool.
So you bought one literally like
10 months,
10
like,
months,
dude, like on the dot. Because like that in Bigger Pockets, like the big thing that clicked with me, it's not about like timing the market, it's time in the market.
Yeah.
So it's like, okay, buy them as quick as possible and just wait. So I was like, 2 months didn't really make a difference, but in my head it was a long time.
I mean, percentage of your lifetime, that's like...
So this is like, what, 2019 or so?
Yeah, I think 2019 and then 2020 going in there. And then right around there. So, because I've been investing like in real estate, what is that? Only like 4 years now-ish.
Yeah.
And you had all those rooms leased up.
Yep.
And did the lender, when they looked at that, were they okay using that lease as income, or did you just have enough income to qualify for both?
No, I did not. I needed, because I was only making $52,000, so it's like I had to have that income. So I gave them all the leases, and I think they used all the individual leases.
Did they make you like show that you were getting the pay as well with your bank statements?
I'm trying to remember. I don't know how in depth they went at this point.
Okay, but they're cool. So either way, they allowed you to use the income. That's great.
Yeah, so I just got to use the income from that, and then go to the next, and then that one was all fresh, like people I did not know filling it, and I filled that thing in the first month. Like I didn't realize like how much demand there is for
right away.
And this is in Gladstone, Oregon.
Gladstone, Oregon, dude. So when I helped people like start house hacking, like I was like, no one had heard of Gladstone, even people that live in Portland. And they're like, who wants to live in Gladstone? I was like,
I mean, what are the attractions out there that are causing people to, rent by the room out there?
I don't know. There's like, it's near Portland.
I guess so.
It's just like people just need somewhere to live, and it's like if you're gonna go get an apartment in Gladstone, even it's like $1,400 for a 2x1, probably like $1,200 for a 1.
Yeah.
So it's like, or you can rent this bedroom for $700.
And I mean, obviously this being like your first house that you're leasing with brand new people, how is that experience compared to obviously living with your friends?
Yeah, so it's different. I try to do it more professionally, have all the leases in place a lot better, and have everything buttoned up.
Yeah.
Going through and actually like completing background checks and screening, so it's like taught me how to manage a property, and I was just
so you don't get killed.
Exactly.
Yeah.
Dude, but you still mess up. So like I had one dude who came and rented a room. He was a manager at Domino's, and I was like, sick. He's a manager, like super responsible. I was like, didn't run the background check just because I was being lazy.
Yeah.
That dude ended up like punching a bunch of holes in doors and walls and just being insane. So that was a big learning lesson, because I probably could have just looked at his background and been like, yeah, we're not going to rent here.
Did you eventually look it up and find out?
No, I never did retroactively. He moved out at that point, filled it again, I always made sure I background checked after that.
I mean, you had a security deposit, right, to make sure that...
Yeah, I had... because what I did with him, I was like, hey, man, can you just leave and sign this agreement that you'll leave tomorrow? Like, because rather than evicting, it's different when you live in the house, because you can different
Oh, right.
laws and
Yeah,
regulations.
because it's your primary residence.
But yeah, we just signed an agreement that he would leave, and I was like, I'll just give you your deposit back. Like, just leave. Like, I did not want him. Like, I was living there, you know, and other people were too. So I was just like, needed him gone.
Sounds stressful.
Yeah, but it's totally worth it still. Like, I mean, like, when you do it long enough, that's the thing I realized. Like, you're gonna run into situations like that.
Yep.
At any point, any investor I talk to has stories like that.
Yeah.
It's just like, how do you handle it?
Real estate never is perfect, or nothing ever goes hunky dory. So.
No, dude, we have like, because I bought some shitty properties too now, and it's like, we've had rough stuff going on, like, you know, properties about to be condemned and people still living there, and it's like, you deal with a lot of problems.
Huh. Yeah, interesting. Well, I mean, yeah, if there's no risk, right? If it was all easy, everyone would do it, right?
Sure, but you can mitigate the risk by like learning, and you're gonna make mistakes no matter what
Yep.
you do, and it's just like, how do you handle it past that? And you realize, like, once you learn how to solve problems, it's just something you deal with and solve.
Yeah.
So
So you at this point you've got 2, and then what was your next move?
yeah, so at that point I got my broker's license because people were asking me like, what's this thing you're doing with your houses? And all
Oh,
this.
okay. So everyone's coming to you suddenly. And you're like,
Yeah.
well, maybe I should
I was like-
monetize this.
Yeah, well, I was just like telling them like, yeah, you should house hack. Like, here's what you do: you buy a house. Like, here's how much money I make. Here's all this stuff. Like, oh, that's super cool. Because I was making like, I don't know, like $12,000 at that point. Because I bought a 6-bedroom home the next time, so I was just trying to maximize bedrooms.
$12,000 on
A month.
minus your mortgages, right?
No. So I was making $12,000 passive, like $12,000 to $20,000 passively for a year on both houses.
Okay.
Both houses.
Total for the year. And-
Yeah. So not like crazy,
Your net,
but really good
I mean,
for
not
2 houses.
that much lower than your. I mean, in the grand scheme of things, it's not much lower than your engineering degree.
Yeah, like for 2 houses, and I spent like $14,000 for the first, and then like 15 to 20 for the second.
Compared to the amount of time and money you spent on your degree.
Yeah, exactly. And then I was living off at that point like $12,000 a year too. So I was like, oh, I'm financially free. Sick. Like,
I mean, top ramen isn't really living. Is it?
I know. I didn't know at that point, but I was fresh out of college, so like, you know. But it was cool because I actually covered all my like base level of living with 2 houses, where I was like, gave me the freedom to quit engineering eventually and go full-time brokering, because I was like, worst case, like, fine.
Right.
But yeah, what was your question? Sorry.
Oh no, I was just wondering about that transition too. When you went as a broker, and then like, did you do that transition like right away? Like, I'm gonna drop my engineering and go straight into real estate.
So I was told by like most people around, like I didn't really have people in real estate around me, and they were like, "That's a really bad idea. Don't quit engineering." Like, you know, like everyone was telling me, "Don't do it."
You're already financially free, but don't do that.
Yeah. So like all the advice around me was like, "Don't do it. Don't do it." So I for a while had my broker's license and did the engineering. Because I was talking to a bunch of people about house hacking. I closed like 3 deals my first month with a license. I was
Holy
like,
cow.
Wow.
yeah. So I was like, oh, this is super sick. I just made like half my engineering salary. I didn't close another deal for like 8 months after that. So luckily I kept both and like learned how to be a broker kind of. Kind of picked it up from there, started doing better with it, kept investing myself, had both incomes.
Yeah.
And I did both those for like probably a year or 2. I can't remember the exact date. And then at some point I was like, okay, I'm just going to stop engineering and full-time real estate.
Right. Well, at that point, how many properties did you have until you?
When I cut off, so I had bought those 2 houses, a 4-plex, a 16-unit.
So after the first 2, you started going for multifamily.
Yeah. So and that's part of the thing that helped me was, well, actually, I can't remember exactly. I might have quit engineering before I bought anything, because what helped me, so once I quit engineering, I could no longer qualify in house hack.
Right.
Yeah,
I realized.
exactly. I was gonna.
So like that's when I learned about like seller carries and partnering and creative finance, because I was just like, oh, I can't buy any properties anymore. Like,
I'm not bankable anymore.
yeah. So I was like, how do I want to buy properties? So like, this is cool. So then I started partnering with people on like their loans. So they'd go partner with them, and they would house hack. We'd transfer title to like an LLC we both owned, or like do it with a 4-plex and that kind of thing.
Yeah, so what did that, how did you structure those partnerships? Because I think a lot of our listeners are interested in partnerships, but it's kind of scary, you know, like putting yourself on a legal document together or trying to split it up. How did you go about that?
Yeah, it should be scary. So it's like, it's been some of my best decisions and some of my worst decisions are partnerships. And I mean, it's a learning experience again. So at the front end, it was just like people asking me like, I want to buy something. I don't know what to do, and I don't want to do it alone. So I was like, we could do this. Like, you go buy it. We transfer title to our LLC because I don't remember. I thought I invented like that's like subject to kind of, the idea of it. If you've heard of that.
Yeah, talk about that.
Have you heard about it?
Yeah, I've heard it, but I think it would be good to explain to our audience.
Yeah, so that's like Pace Morby on Bigger Pockets is like talks about that a lot. It's the idea of your mortgage and title are two separate things, and you can transfer title, leave a mortgage in place.
Oh, right.
You trigger the due on sale clause, right? And the bank has the right to call the loan due at that point.
Theoretically call the note.
Exactly, and that does happen. Like that is a risk with it. I didn't know. I knew that at that time because I thought of this idea. I don't remember how. I thought I invented it, but then I went and talked to an attorney about it. He's like, dude, this is called RAP. It's been happening I've done this for 30 years. Yeah, it happens all the time. Then he helped me actually structure it and do it.
Okay.
Was that first deal. And that was, so I started buying that fourplex with 3.5% down. My buddy went and bought it. I bought into the LLC with 50% on the back end.
Okay.
And then we owned it 50-50. So I owned a fourplex for 1.75%.
Right. So more or less, your buddy was the FHA buyer.
He can go buy it,
and then afterwards
you
pushed it into an LLC.
Exactly.
And then went 50-50 on it.
And you said it did not trigger the due on sale clause.
No. So the bank never called it due.
Okay. But theoretically, the
they
risk
are allowed
is,
to. Yeah, they're allowed to.
What we should, as advisors, always tell our clients is that if they're thinking about doing that strategy,
correct.
Because that's what it says in the mortgage note.
Yep, exactly. So you trigger the due on sale clause, and it is a risk.
Yeah.
My attorney was like,
which means, what does the due on sale clause mean?
So they have the right to call that loan due, meaning they tell you your payment is due in full.
The whole balance,
the entire
which
payment.
means you either refinance if you're financially able to, or sell if you're able to. So it could be risky, like, for example, if the market had gone down and that you lost equity, or if you're super leveraged in other ways.
Yeah, and they actually have to give you options to remedy it as well.
Okay, so they give you the chance to like put it back.
Yeah, and that's
take it out of the
lower
LLC.
ground.
Okay.
So you would transfer it back and then do like a lease option structure. And I believe when I was going through the loan docs, you might know better than me. I don't know if this is loan by loan, but I believe even with a lease option, you trigger the due on sale clause. But a lender would never know because you're not transferring title. So it's like, how do you even know? You have to go record a memorandum and do all this stuff.
Yeah, I mean, I think you're right in the sense that like you probably want to look at it from a more conservative look, but like to your point though, there are some like they have to go through the mitigation process.
Yeah. So, but there are risks. But my attorney that I talked to, he had been doing it for so many years. He had done like hundreds and hundreds of them.
So he was very comfortable with it, and he'd seen both. He'd seen where the bank came after it, so he'd seen that actual process.
Yep. So he gave me confidence in how to do it and
That's
whatnot.
nice.
And he's like, yes, you're good to do this. It's not legal. They do have the right to call it due. This is the scenario in which they would. Here you go.
And you just had to avoid that specific scenario. And what is that scenario?
Stop making payments usually.
Oh.
well, yeah, I mean, like if you think about it from the bank perspective, like if you need money, you're gonna do an audit, right? And the first thing you're gonna go for, right, is the people that are more risky, who's the people not making payments, right?
I would think so. I mean,
yeah, that makes sense.
But yeah, so that was the idea of doing like a partnership like that. And you don't even have to so if you have a partnership, you don't necessarily have to transfer title. But if you're not on title, then, are you protected? And then there's all these other things. Like you can have operating
Right, if you have a
agreements and different
divorce, then it's going to be hard to, unless you got to have good paperwork for it, right?
Yeah, exactly. So that was like one of the first deals I did outside of my license or outside of my income from engineering. So that was super cool just to get into leverage into a property and take advantage of that.
Which, by the way, this is like pretty complex strategy, but at the same time, you can, like you said, you can figure it out.
Oh yeah, you can definitely do it. I mean, I don't remember. Like I was just thinking because I was just obsessed with real estate at that point, listening to everything and like thinking of deal structures like that, learning about seller finance. So I thought of that, called the lender, kind of asked him about it. He's like, yeah, you could do that. Here's some things. Call an attorney, ask him.
I invented this.
Dude, I literally thought I did. I literally thought I invented it until I talked to the attorney, and then he's like, just shaking his head at me. He's like, dude, this is called a RAP. Like, it's a thing.
So obviously with your partner who bought this as a, like you said, FHA, right? So they had to live in it. How did you structure?
They just pay our LLC rent.
Oh, they're paying the LLC rent. Okay.
Yeah. So he just lives in it for a year and then moves out, normal rental.
Okay, no, that makes sense. I was gonna say, how do you figure out that balance with that person living there? So
yeah, because I mean, and you can do discounted
so
rent
this guy was thinking of it as investment. He wasn't thinking about it as long-term home. He was like,
no.
all right, I'm just gonna get in this deal and it's gonna be my first one.
Yeah, because when I was starting out too, like all my friends are engineers, so they have a decent enough salary, can qualify. They need somewhere to live anyway, so it's like, yeah, perfect. Like I just have to live here for a year, and if my job changes, I intend to live here, and I can move. Like, it's fine.
Yeah.
So I'm like, cool, we'll do that.
It's brilliant.
Mm-hmm.
And how was that partnership? I mean, he had no experience, right? So like.
Yeah, and he had he actually owned one other property before that that he got into, and he was house hacking it too. So he had some experience, and he understood. So he understood like the creative structures a little bit and all that. That deal was super awesome, went well. What I realized with that partnership is like expectations on the front end. Like, I knew properties have problems and could cost more money.
Right.
He didn't know that as well, so we had to put like, it was a pretty nominal amount of money in, like maybe like $2,000 each, $3,000 each, and I was just paying for everything.
Yeah.
And then at some point it was just kind of like, okay, let's just break this off and end it. And we actually sold it on Korea Finance and wrapped it again to someone else.
Oh, really? Interesting.
Yeah, because we were just able to like get such a higher sales price where it made sense, and it was a win for the other person too, because they got to take over our low interest rate debt.
So, yeah, explain that process of how you kind of sold it to someone else and have them take it over.
Mm-hmm. So at that point, we were selling it. We bought it for like, I don't know, like $600 for a fourplex. We sold it for like $750. Nice. But we took $70,000 up front and then like an $80,000 note on the back end with a balloon on it.
Okay.
Why they wanted to do that is because we had like, I don't know, like 3.75, 3.25 debt or something. Just some debt in the threes. So they're like, sweet, that's way better than what we can do.
Better than market.
Mm-hmm. And on an investment loan for them, right, they would have to bring in 25%, 25%. Okay. So they got to leverage in, also bring less than 10% cash, then create that note, which we collected. I think we're collecting like 6% on or something like that. So still a decent rate. I think it was IO too with a balloon. Okay. And then at some point they'll, keep increasing rents, go refi it.
Right. Yeah. So they have time. Mm-hmm. Yeah. And if they need to sell it, they still have time.
Yeah. So for them, it's no problem. Like, that's a sick win-win.
Yeah.
We got like this higher price, right? Because we were trying to sell it for this price, no one would get it. They hit the price for us, and then we just took it in terms of a note.
And did they approach you with that strategy, or were you? Is that part of?
So that was another buddy who like, I didn't know him super well, but he was just in the real estate space, and he was like, I don't remember. I think I saw him at a meetup, and he was just talking to me. He's like, could I buy it like this? I was like, yeah, that's sick. But that's how I buy a lot of properties, and it's like, it works. Like, I see how it works, like why a seller would want to do it, like, because I was the seller of that property.
Right. Yeah, because you had done it first, right? Mm-hmm. Yeah.
And then you said you had a 16-plex?
Yeah, so that was the next deal I did after the fourplex. So where I work, I broker with SMI right now.
Yeah.
My principal broker, Gabe, he's like my mentor and partner on a lot of deals. He was one of the first people I met in real estate. I was 22 going into banks asking them how to get commercial loans, and I looked like younger than I do now, dude. I looked like I was like 16. So most of them would just kick me out and not talk. Yeah, they wouldn't talk to me. But one guy was super cool, and he's like answered all my questions because I'd read all the books and everything. So at this point, I realized like, oh, I knew more than most of those guys in there actually. Yeah. So I could get the meeting. Then they looked at me like, you have no money. Right. You can't do this. Right. But one of the guys was super cool, sat down with me, answered all my questions. Super nice guy. He connected me with Gabe down in Salem, and that's where I'm originally from. Went to lunch with him. I showed him like what I was doing, how I was trying to buy deals. I was writing letters at that point too to like off-market deals to try to find them. Just because bigger pockets, like they're like, that's how you find deals. I was like, okay, sure, let's do it.
Letters, or get the machine to like make it look handwritten.
Yeah. That's why I learned later on, dude. I was sitting there before engineering work, just like spending 15 minutes a letter writing them all out. But so he just I show him what I was doing. He's like, I was literally going on apartments.com to figure out what apartments there were for sale. And he's like, just call a title company and they'll give you the list. Like, he gave me all these little tips, how to find a deal and do all this stuff. I already knew how to underwrite it just from my engineering background, like math, or I thought I did, which I kind of did. Just ran with his advice, got connected with a dude who owned a 16 unit and a few more deals actually just from those letters.
So this was off market.
Okay. Yep. Yeah. So I found this 16 unit, put it under contract.
How many letters do you think you wrote?
I only wrote 100. Like, okay, dude, that's it.
So how many hours do you think that was of your time spent?
15 minutes a letter, so like 20 hours, I guess.
Oh wow!
But like, it took a while to write them. Like, I should have done it way smarter, like you're saying.
Yeah, but, pay a company to do it.
Yeah, sure. But at that point too, I was living off like I was super cheap and frugal.
But still,
so, like,
I mean, even so, minute. 20 hours for a 16.
Oh, totally
deal.
worth it. Yeah, dude.
If that was your only job, how many of those could you land a year, right?
Yeah. No, totally worth it. Like, I wouldn't do it different. But like now, you can do it more efficiently, like you're saying.
Yeah.
But yeah, so I got connected with that dude, and I was just like, told him like what I was doing. Like, hey, I just graduated from Morgan State. I really like real estate. I saw your property at this address, and I would just love to talk to you about how you bought it, and I would, love to buy something like this one day.
Yeah.
I talked to a few of the dudes. One of the guys was super cool. Went to lunch with him a few times, and was like, man, like, I really want to buy this. Wrote him an offer. I had no clue how I was going to actually buy it.
Yeah.
Just started pitching it to people, basically.
Just slung it out there.
Dude, yeah, I mean, that's really what it was. Like, I convinced him that I knew enough people that would buy it with me that I could buy it.
Uh-huh.
Yeah.
And he believed me. I mean, that was it.
Amazing.
Yeah, and I thought, and the real story of why it worked is it was a deal. So, like, I could actually underwrite it and see why it made sense on paper. I was like, I think someone would buy this. Like, I didn't know.
You knew you could sell that to other investors.
I thought I could because I was like, if I had this money, I would definitely buy this.
Right.
So I just went and talked to other investors at that point and eventually found people who came and partnered with me on it.
Mm-hmm.
We bought it together. I owned like 8% of that first deal or something.
Did you have to bring any money in yourself?
So I brokered it because I had my license and just put that money back in.
Oh, your commission just went straight into it.
I love it.
So
it's just your commission, yeah.
So you're like, okay, here's 2.5%.
Exactly. So that's where that came from. I realized on the front end, like I probably could have owned way more of the deal because I did all the work, underwrote it, found it, did all this, raised all the money. But at that point, like I had no clue. I was like super sick, just trying to do a deal and learned a ton.
I'm sure those investors were very thankful that you didn't know that.
Oh yeah, they definitely were.
But also, I bet you've made some good friends and partners that way too, which is worth that whatever 5 or 10% that you lost out on.
Yeah, so that's the biggest thing. Like I've learned from like my mentor Gabe is just giving more than you take. So like when I did that first deal, like they made me put my whole broker fee in, did nothing. They actually took half my broker fee too.
Oh, really?
They were brokers, yeah. So they were also brokers. They took half the broker fee, and so I owned less of it. So when I met my buddy Dane, have you met Dane?
Yeah.
Yeah, so he came to me same way I went to Gabe basically. He owned no properties. I just showed him what I was doing. He just asked me. He went and found a 10-unit deal, same exact story basically. He brought it to us. We gave him, he pitched his broker fee. He would have owned like whatever, 5-10%. And we gave him 20% of the deal instead because we're like, let's do more deals in the future.
Bring us the next one too.
Mm-hmm. Yeah. Which kind of led to like doing more deals together.
Yeah.
So like, and that's one thing I learned from Gabe. Like I'd start doing deals with him and he would give me a piece of a deal and like that I felt like I didn't deserve. The value was I was actually doing a bunch of work, like underwriting the deals and saving him a bunch of time.
Right.
Which you picture now, but yeah.
Huh. That's super smart. I love that.
Mm-hmm.
Okay, so now you're moving on to 16 plexes. Then and you're in the meantime you're also selling real estate, just like regular stuff. Or are you only working with investors or a mix?
No, I was doing a mix. Mostly people went into house hacking because I didn't understand. I thought buying a house to live in was a really bad idea at that point, which most realtors won't say. But I was saying like, yeah, just like house hacking is all that made sense. And for people of that demographic in my age class, like that's all that I really thought did.
Right. You don't know what it's like to have kids and like,
So now it's a different story.
Exactly. That type of thing,
So now I understand a little better like of why people. I was like, why do people? You should just rent. I'm doing the math.
Right.
I'm like,
why doesn't everybody have just a bunch of roommates?
yeah. So I didn't get it, but yeah, so I actually transferred to SMI. I was with Keller Williams because it was just in real estate right next to my engineering office. And I just walked in and I was like, how do I get a license? Like, and they helped me through it and they were super awesome, like showed me the ropes. But I transferred to SMI because when I first met with Gabe to when I bought that too, like I never talked to him in between. It was just like a one-off meeting, just met a guy, didn't really know him. I called him back like 8 months later because I bought it. I was like, hey man, I just wanted to thank you like for your advice. He's like, let's go grab lunch again. And I showed him like what I was doing and all this stuff. He's like, you should come work at SMI. Once I got there, then I got to just start, dive in and be around all these investors, start learning way more. And then just there was more partnership opportunities there too. So that really helped scale me. Is most of my stuff is partners after that.
Yeah.
And that's like, because I still didn't have the balance sheet right at that point or a huge income. But if you find a partner who does and you can go structure the deal, you can get in on a deal.
Nice.
So,
and so SMI is only investor focused? They don't do like regular first time home buyers?
No, they do still. But it's just like, it's more unique and like there's just investors flock to there because there's just people who invest there. So people who
and they expect that probably all the brokers there are investors, right?
Not all, but most, yeah.
Is SMI only in Salem or is it a bigger region than that.
Yeah, the main office is down in Salem, and
Okay.
that's like Albany. And then I think they just opened a Portland office because now with the current market, like a bunch of brokerages are shutting down, so like more brokers are coming in and.
Okay, interesting.
Expanding.
Yeah, the other thing I like about SMI is that they host a monthly investor. You guys host a monthly investor event.
Yeah, so I started that because we used to come up
Okay,
here.
so you started that.
Yeah, so I started that, and then SMI like sponsors it and pays for it.
Nice.
Same with State Farm. So those guys sponsor and pay for it. But we used to come up here to like Mike Nuss's like PDX Investor Lab. And there's a bunch of other meetups too. So we just had nothing in Salem.
Yeah, and it's a great event too. There's usually at least 50 people. Sometimes it seems like there's 100 people
50
there.
people, geez.
Yeah.
We get like 50 to 100 typically, yeah.
And there's no what do you call it, fee to get in, or it's just free?
No, it's just free. Like we buy everyone food and drinks.
Yeah,
and,
it's a really great event.
I have to pop in sometime.
Yeah, dude.
Yeah, and there's always like a deal board, and I feel like it's a great place to make connections.
Mm-hmm.
Talk a little bit more about. So you started this networking event, and how many of your deals now are coming from, people just like in your network and people that you've partnered with versus before you were writing letters? How much value do you put on kind of that networking world?
Yeah, I mean, networking is huge, especially for partners, and then for the deals too. So now, like we have a separate company too. We call Vesta Solutions, which is like helping people structure these deals creatively. So we come in and structure like deals for brokers who are trying to do creative structures, kind of.
Okay.
Whether it's like seller carry, land sales.
So you kind of consult on that,
exactly,
for someone that's like their first time trying to get into that world. Or
even like multiple, not even first time, like even people who have experience, just because we've done so many of them at this point. It's like,
oh, interesting.
There's so many intricacies within them, and then it's like a lot of underwriting too. So we're like poor portfolio analysis and stuff like that.
So you guys will like say like, no, this isn't a deal. Like you shouldn't do this.
Yeah. So we'll analyze it, give you a package on it of like why, like all your numbers on it, which is like a lot of people need help with. And we'll do that for like syndications or just like a house hack or whatever.
Oh, nice. How do you structure your fees for that?
Yeah, so that's what we're working through right now because a lot of it's not brokering, so it's like a flat fee for some of it. And this is all like pretty fresh because we realized we were spending all our time doing this and people really want us to do it.
Right.
And they wanted to pay us.
Super
for
valuable,
it.
yeah.
I mean, nobody wants to do their own analysis.
Yeah.
Yeah.
So I would rather have somebody tell me something's a good deal so I can buy it.
Mm-hmm. Yeah. So it's like, and then that, or it's like looking at the debt structure of someone's whole portfolio and seeing where their equity's at and what they can do to optimize it. So it's like we work with like a lot of new investors, but a lot of it is the experienced investors at this point are taking them through 1031s and kind of doing all that. So it's just like, yes, we'll broker the transaction, but a lot of time people that have brokers are still using us to like do all of this, or we realized they were just calling us and asking us, and we were spending all our time doing this, and they were like, "What does this cost?" And we're like, "Oh." Like, I don't know.
Right now, nothing.
Yeah.
Hold on a second.
Yeah, so it's still like we're still kind of on a case by case basis with the fee structure. So like we just sit down with someone and figure out what they need, and then kind of go from there. So yeah, we're still, because this is pretty fresh of us adding this like service to what we're doing.
Got it. Cool.
Yeah, I'm curious. You mentioned seller carry, and I'm sure you have a lot of clients come in and ask, "Oh, I want to seller carry." How do you help them figure out what terms they should be doing? Like, what questions do you ask to get them what they want in terms of a seller carry deal?
Yeah, so most people want to do like no money down and like no interest rate.
Yeah, how do you make it fair for the seller? And obviously for your client.
And that's the only way you can do it is you have to make it a win-win. So like when we're talking to a seller, we're never pitching seller carry on the front end. Like we're really asking them like, what are your goals and what are you trying to accomplish? And then I know which deal structure will fit at that point. So it's hard to say because it's not one case fits all at all. Like some people like literally want no money and that's best case for them because they just want that monthly income of a specific amount.
Yeah,
every
they want to
month.
spread out their capital gains. Maybe people in their retirement, they don't want to pay all that.
Yeah, and there's some people that too. We've even talked to people who are like, I am not responsible with money at all. If you give me like money up front right now, I'm going to the casino tomorrow and I'm blowing it.
Yeah.
So they want it structured. They don't want it prepaid and all this stuff. And then other people are like, I need half this up front and whatnot. So it really depends on what they're looking for. With an investor too, a lot of people, they want a good deal.
Of course.
So it's walking them through like, what is a good deal to you? And a good deal to me, it could be a terrible deal to Jordan,
Yeah, exactly.
So it's really figuring out what is a good deal to them and why, and then taking it from there, because most people just don't have specific criteria, aren't thinking about fully. They just want to buy real estate, which is sick. Like, that's a good way to start, but you have to think about, like, are you investing for cash flow? Are you investing for like a value add? Or
I was
what
going to mention, like, don't you have, like, I feel like a lot of new investors who listen to Bigger Pockets walk in and ask, I want cash flow. How do you deal with that?
Well, realistically, like, you're not going to get it, especially
Yeah.
on, like, when you're house hacking or doing something. When you're house hacking, you still can today, even on 7% rates.
Yeah.
Like, if you get enough bedrooms
It's
in
like,
there.
it seems like the only way, actually, to me, is like
Rent out
rent out a bunch of rooms. Yeah.
Yeah, but it's also not a bad deal if you can go get 97% leverage and you can break even or be slightly negative.
Yeah.
And you have a path to cash flow in the future because you're paying down that principal. So when you go spend 14 grand and your house goes up by 3% and you pay down like 6 grand year one of the loan,
Yeah.
like, your ROI is huge, even if you lost $100 a month, $200 a month.
Yeah, exactly. And then, I mean, I always tell people, like, hey, these rates are going to drop at some point, hopefully, cross my fingers, and refinance.
Well,
Yeah.
and your risk is just so much lower, right? Because you're putting in 14 grand instead of 120 or whatever.
Yeah, and there's different ways to think about that risk, but yeah, sure. And then with the rates, like, I mean, I don't know, like, so it typically, like, I think about, you have a couple different options. So, I mean, rates stay the same. What do prices do? Are they going to go up? Then great, you bought it and your rate's there. Rents are continue to rise also. So,
Sure.
like, I don't know. You can't predict all of that well enough. You can have a, like, I don't know. You guys may know better than me about rates.
I mean, I don't promise.
know.
I mean, I don't promise anything. I say, hey, when or if this opportunity happens, like, you can do this.
Mm-hmm.
And I also tell people at these interest rates, we're getting good price points. So
Yeah,
You know.
it's easier to buy right now. Yeah.
yeah,
If it doesn't happen though, like, you may have a great rate for 3 years down the road. I don't know.
Yeah,
Like,
yeah.
Yeah, I mean, if rates keep going up, then you bought it at a good time, right?
Yeah. So, but you can still look at it in pencil, and people don't understand, like, you're getting to put such a little money down. You're going to bleed for whatever, 1 to 3 years maybe, and you're going to be really happy you did that.
yeah, exactly. I mean, if you're paying part of your mortgage, you're still
Mhm.
paying your principal down. Like, they need to realize that, and the tax benefits and all
Yep.
this other stuff. So, like I said, I get those calls almost every week about wanting cash flow.
Yeah.
And I'm just like, well, at some point we'll get there.
Yeah, go buy an 8-bedroom home, and then there you go, for the rent out by the room.
Turn your backyard into a glamping space or
Mhm.
something. Yeah.
Yeah, and you still can cash flow, though, on things, like, which is the
Oh,
crazy
of
part, and
course,
people
yeah.
don't realize, like, especially with the multifamily stuff, like, you can go buy a duplex, it'll cash flow, but usually, if you're getting it for the right price, it's under market rent, and you're going to have to go, remove the
Yeah.
tenants, renovate, and do that
Yeah.
whole thing.
Yeah, yeah.
Or increase their rent over time, but...
Which for most first-time investors, that's a lot.
It is a lot to ask of them, but yeah.
And it depends. You have to find the right person who wants, like, we tell them, like, it's not just free money. Like, you have to do work. Like,
Right.
this is what you're going to have to do. If you don't want to do it, great.
Yeah,
like,
there's deferred maintenance, rents are low, et cetera. There's,
Mhm.
I think those are the best opportunities.
Yeah.
If anything. And you think about, you're making these fixes, that's just going back into the equity of your house.
Mhm.
You're fixing a problem that if you sold, you'd have to pay out to fix it at some point. So,
Sure. Yeah.
It's not a bad investment.
So what other, like, new and interesting things are you looking at? I imagine you're still doing some of the same strategies you were doing before, but now that you've been doing this a while, what is your, like, sweet spot, or what do you like the most, or what's most exciting to you right now?
For me personally to
Yeah.
buy,
Yeah.
I mean, seller carries and creative finance deals. So right now, like, wrapping people's existing debt is, like, just such a good opportunity.
Just because there's so many that are below market interest rate.
Yeah, like, dude, we just did a couple, like, we bought a house, for example, for $7,000, I think it was.
What? Wait, you bought
Yeah.
it? Oh,
Well, it cost us $7,000. It was like a
Okay.
$300,000 home. It
Okay.
cost us like $7,000 out of pocket because we just paid the broker fee to the other side.
Mm-hmm.
And these people bought their home 100% leveraged, had like a 3% rate.
VA loan or something.
I think they did something with down payment assistance.
Oh,
I think
okay,
conventional
DPA
with
program,
down,
sure,
yeah,
yeah.
something like that. 100% leverage. They didn't realize, like, they're gonna have to write like a $30,000 check to sell this house conventionally, which they did not have if they sold it for the price they listed it for.
I see.
But it was a perfect rental property. Like, it cash flows like a couple $100 a month. Like, so we go to them, buy it, just pay their
Man,
broker fee.
that's really good. So explain that again. So because you're buying a home with someone that bought how many years ago?
Probably within the last year or two.
Yeah,
Like,
so they put zero down, right? And
Mhm.
and in the last year or two, sales prices have depends on the market, right?
Yeah, it was
Some-
down. Like, it went
In this particular place, it was down a little bit. So because of that, because of the fees from the broker, they were going to be net they were going to have to come in with money to close.
Exactly, which they didn't have. Like.
Which, yeah, I mean, if they didn't have money then, they're probably not going to have money now. So your solution, which was a win-win for both of them, how did you guys figure that out?
Calling a lot of people. Like, so for that, like, it's me looking at the house, seeing they have no equity in the home, right?
So did you start with a list from a title company that was like, hey, give me all the...
I was just looking on the market on that.
Oh,
like,
really?
I was just
Okay.
on the market,
Yeah.
And did you see what their motivation was for leaving? So
they were
quickly?
moving out of state.
Oh,
so,
okay.
like, their job just changed and they're going to a different state.
Okay.
Which is most common. Like,
And they were like, I don't want to lose money, pay to sell my house at this point.
I don't think they realized that they were going to have to.
Yeah.
Until we started asking them, like, or we were asking their broker, and then they're like, oh, like, how am I going to get paid? Like,
Yeah.
That's bad. Sorry, that's bad.
Yeah.
I mean, I guess that's the case with a lot of brokers don't kind of realize that right away, right?
Yeah, and like, again, like for someone to sell in creative, like distressed, you can really help. Like, it was a win-win. Like, we helped them out. Like, they didn't have 20 grand to pay it. Like, you know, they're all good to go. It helps their credit. Like, you can catch someone up on payments too, rebuild their credit for them if you do like that. There's also people not in distressed situations, like myself when I sold my property, right? I just got a higher dollar value. So, like, we'll sell quite a few of these to investors right now too, where you're bringing like anywhere from 30 to 80 grand. You can go take over a 3% rate, buy a $400,000 home with like 40 grand down.
Yep. So wait, but for the person that's selling now, what about the whole part of their mortgage liability? How does that work out from them when they're going to apply for another mortgage?
They actually bought another home right after.
Oh, okay.
I structured that one, and this was something I thought of to kind of work around that and to work around it. They were worried about the due on sale clause.
Yeah.
So what I did is I did a lease option with the option to finish the wrap at any time. So it's technically just like a normal lease option. We have our lease. They can use 75% of that, which we just set at their mortgage rate.
Okay.
To go buy the
Oh, so
next
you're
home.
like technically leasing to own the property.
Yeah, but we can go record our deed at any time. We have the option
I see. So from the lender's perspective, they're renting it to you.
Mm-hmm.
So it doesn't matter. They can use the income that they're receiving from you to offset their mortgage.
Yep.
Brilliant.
Exactly.
But technically, you can just buy it at any time from them.
Yeah, and the hard part of why I did that is I set the deed because you would know better than me. If I go buy, are you familiar with like land sales contracts?
Not familiar enough.
Okay, so like note and trust deed is like how most mortgages are done.
Right.
You have title of the bank.
Yep.
Land sales contract, if a seller sells to you, they stay on title.
Mm-hmm.
And you have like essence of ownership. You record a memorandum of it. So you cloud title so they can't go, resell it and whatnot.
Right.
It's a form of an owner carry. But if I take that to a bank, different lenders view it differently because I'm not on title with me going and refining it.
Right.
So why I did it this way is we could record the deed and take title at any time so I could go refi it or sell it easier, do whatever.
Well, because right now, if you were to go, you would be a purchaser or refi for you.
So so I'd talk to you and you'd be like,
I think,
oh, shit. Like, I don't know.
yeah, because you're leasing to own it. Because I think it would be a purchase, right? Because
it's how you guys may consider
it.
It
depends on how the specific bank looks at it. But yeah, that's true. Because some of the banks that I broker to would look at that as a differently.
Yeah, and it's a weird space because you'll talk to 5 different people, get 5 different answers.
Yeah. Well, because it's not the most common scenario, but. Yeah, that's super smart. I can see how that's a great win-win scenario for both parties, and a super interesting, like in this specific market that we're in. That's a great strategy.
Yeah, and it was common. Like when I talk to like younger brokers about it, like they have no clue, never heard of it.
Right.
Yeah.
When I talk to some of the older brokers, they're super familiar with it, which is really cool. Like they're like, and then they give me more ideas on how to structure these and do different things.
Right. There was no reason for us to be doing this when rates had dropped
2%,
down.
yeah.
When you're at 3.5% or 2% or whatever. Interesting. Okay. So that's one good strategy. What else have you been seeing that people are creative that us normal investors wouldn't necessarily think about?
Yeah, I like mixing bank financing with seller carries because a lot of time with the seller carry, right, you come in and you want to give them very little down. Seller needs a chunk of money to move on. So if you mix bank financing with a seller carry, you can get them the best of both, where they defer some of their gain while also being able to get cash up front, and then you can get a blended rate or the leverage point you're looking for.
So you just find them out, how much are you looking for to cash out, and then we can seller finance the rest on whatever terms that make sense for you.
Yeah.
Okay.
And that's a really good way to go about it. I really like that. I mean, there's just so many options. Like
And typically the
between-
lender will just see that as, like, typically the lender will just see that as, like, subordinate financing.
Yeah, and there's a few different, like, there's so many different ways to structure that too. So, like, you can do it on title, like just subordinate financing, second deed of trust. With resi space, you have to, they'll allow, actually, which a lot of lenders don't know, they'll allow seconds at closing and let you do that.
Yep.
It just has to be within the normal loan guidelines.
Yeah, so typically we do that with just like a first and second, like a piggyback HELOC, right?
Yeah, but you can do it with the seller, which people don't realize. Same for commercial. You can also do private debt. So, like, someone can sign a promissory note with you not recorded to a title. There's different, reasons why they would or
I
would
feel
not
like
do
that happens a lot in like family situations.
Yeah, maybe more so there. I haven't dealt with that exactly, but we'll do that at times. Some lenders don't allow seconds, so you have to do different workarounds or have different plans with that. You can do partnerships where you leave them in the deal, actually, and they stay on title with you. Yeah, there's just so many different ways to structure it. What it comes down to is really, like, what the seller's goal is and then how you meet that. Because, like, I don't care if I buy it on a lease option, land sales, or, like, any of that. I'm trying to buy an asset that makes sense and hold it over a long period of time.
No, of course.
So, like, for me, it's like, okay, I'm not on title. Like, I'm doing a lease option, so I don't get to depreciate it. That sucks. But I still got to leverage it and buy this, like, asset. Cool.
I see.
And then it's a win for them. Like, you really have to, like, think, like, make it a win for a seller for them to do it, though. Like, because you're not stealing anything from them.
It's not about getting a deal, like getting a discount from the seller. It's more about, like, trying to win in your negotiations. It's more about finding a solution that works for both parties.
And really, like, you
just
just
both,
have, for them, like, it's the biggest thing of, like, why would they want to do it and what makes sense for them?
Yeah.
And, like, that's really where you, like, have to go about it. So when you talk to people, it's like, I could make any deal work for me. Like, it's not that hard. Give me no interest rate. Like, so, like, when you start teaching people about this, they're like, oh, yeah, this would be a sick deal. Like, get me a 1% interest only rate at, like, I'm like, why would a seller do that? Like, like,
I've
maybe
heard some ridiculous stuff.
Yeah. And some people would in some scenarios. So it's like, it's like, yes, this does make sense in a specific scenario, but not for every single house. Like,
Yeah. No, I think I've seen the strategy. I had a client who always wanted to go way over on price, but, like, just have ridiculously low payments. And I was like, why would they take this? Yes, you're trying to wow them on the front end, and then just, I mean, pardon my language, but shit on them, with all the small payments you want to make. I want to make $1,000 payment a month. I'm like, this is an $800,000 house. That doesn't make any sense.
Yeah.
It's gonna go for 100 years.
And there are times where that does make sense, though, where people do want that crazy price and you can actually get the low terms. It's super rare, but it's like you're typically not just pitching it to them, because then it's like, go pitch every single person that deal and maybe you'll eventually find someone. Like, just talk to them and figure out what they're actually trying to do and if you can help them.
Yeah, I think I was laughed at too many rooms
doing that
on those deals. So
yeah, and that's the part too when you start doing creative finance is, like, brokers, and some of the brokers are kind of assholes too, like, as you've known, like, just like, that's not real. Like, I just did
real.
this. Like, I just did it.
Like, I literally just did that.
Yeah.
Well, a lot of brokers ask me, like, how am I going to get paid on this on seller carry, deals? That was a big question when I first started doing it. I was like, I don't know. I had to learn about that, and apparently you can get paid out on a monthly basis through title, or how does that work?
Yeah, you could do that too. We've never structured that. Like, we'll always, like, when we're wrapping and bringing no money, like, we'll just pay the broker fee usually.
Okay, just straight up. Okay.
Yeah, just because a lot of the time, like, on that deal, it was like $7,000. It's like, yeah, it was just, we could have negotiated with them and, like, we'll pay you $200 a month or whatever. But it's like, we're trying to make, like, we want the broker to sell us more deals. Like,
you want to keep it easy for them, and especially if they're not doing a ton of seller carry deals, they just want to get their big check at the end. They're 2.5%.
Yeah, and it's like, yes, you could probably negotiate someone down and, like, beat them down and really do something, but it's like, okay, they're never going to do a deal with you again.
I mean,
like,
back to your whole strategy of win-win for everyone, I think that makes sense to just meet where people want to be and find the right deal. Yeah, not try and fight for the deal that works for you.
Yeah, which is sometimes a loss for us, because we go out and we're like, okay, this is how we would buy it, and people do want to negotiate. So we've kind of realized, like, okay, we got to give them, like, a few options and negotiate a little bit, because sometimes people just want to feel like they win and, like, do your price. So it's kind of like a thin line between those two, but yeah, you do have to make it a win for them.
Right. Makes sense. So you're you said you're 27. You've already built out nice portfolio. You've got your real estate business going. You've got consulting business coming up. What is your kind of, like, what do you see yourself being in the next 5 years? What is your plan? Are you going to keep pushing after deals, or are you going to?
Yeah, I mean, buying more deals, like that's my favorite part is just structuring deals, especially creative structures. So just investing more with this like consulting business. Have you heard of EOS?
Mm-hmm.
You guys?
That sounds really familiar. Is that Brandon Turner's talked about it?
Yeah, exactly. That's where I first heard about it. And my buddy, I have buddies who run it. And it's just the way of structuring a business more systematically and like thinking through it. Us using that has been like a huge help with this consulting and our brokering. And we're trying to learn how to really use systems and then apply it to our investments and grow there after we like have systems down, know how to like hire employees and do all that. So that's my goal, and then just applying it to investing, because like investments, I love just structuring deals and doing deals and investing.
Isn't there a specific book that talks about EOS?
Traction,
that's it. That's the one. Yeah, I have that sitting on my nightstand. I haven't read it yet.
Yeah, I would highly recommend it.
Yeah.
So like I did that because my girlfriend took their business like within like 5 months with no like business background, like, and just amplified it greatly by using EOS. And I saw my buddy do it as well. I was like, oh, maybe I should read this. And I read it. I was like, oh, this makes a lot of sense. So I read it again, took all the notes, and we actually like applied everything the book said. And like now we have, we were using like Excel spreadsheets, like just all over the place. And now it's all like defined, and every quarter we have new goals, and like we're tracking towards them, have all our metrics we're tracking, and it's way more organized, and you actually have a vision and like a path to reach it.
And are you planning on like moving up into larger buildings over time, or do you still like the small, medium stuff?
So right now I'm buying stuff that's like, the biggest thing I own is 32 units. But I'd still buy houses right now if it makes sense. Like
this 32 units, are they all in Oregon?
Yeah, so I own about, I think I'm under 100 units now because I sold a thing, or had, we can talk about partnerships again, but I had some bad partnerships. So I think I'm at like 90 something right now. Okay. And that's mixed between like multifamily and houses. And that's from Portland down to Albany. Okay. But I would buy most of Oregon as long as I can get management there.
Right.
So.
And what percentage of that portfolio do you own outright?
Yeah. So no, it's
partnership?
all partners. So I own probably like 40 to 50% of that. Most of my partnerships are like 50-50, and then some, like I did like a few like that 8% deal on a 16 unit, and then some I own 100%. So roughly around that like 40 to 50% range.
Yeah. Okay, so you mentioned some bad partnerships. Let's talk about some of the pitfalls, like some of the deals that have gone poorly. Because I mean, it's easy to talk about the things that went well.
Oh, sure.
Yeah, we love hearing about stories where it didn't go as well.
Dude, so I lost like 150 to 200 grand on one deal.
Oof. Wow.
Yeah. And this was like a $500,000 deal too, and I own 25% of this deal.
Yeah.
So in this partnership, these guys sold me on like they had been doing all these flips and all this stuff successfully. We were good friends too, and still friends with some of them.
Right.
But they were just pitching on me, and they made all this money and whatnot. So we were going to go into this partnership. It was going to be great. I realized like I didn't know anything about construction at that point and redeveloping a project. So they just told me the numbers. I underwrote it based on like those numbers.
Right. Was this prior to wood going up? Was it this time?
So this was not. It was. This was early on, and this is unfolded like it's still unfolding. Even. Like this has been like multiple years. Dealing with this. But yeah, that was probably part of it, but that wasn't the main reason even. Yeah. No, dude, it was supposed to be like a $200,000 budget, and it cost like $400 plus
on a $500,000 house.
And yeah, it was an office space that we were converting to an Airbnb 4-unit Airbnb.
Oh boy.
So there was more permitting involved and all this other stuff. I had no clue about at that time because I was pretty fresh. I was just like had good partnerships beforehand, so I was like, partnering is great.
At this point, you hadn't done like the development side, right? Okay.
Nope, hadn't touched it. They convinced me like they knew what they were doing. They had a contractor buddy who was doing it too. He didn't really know he was doing it, turned out. But I was funding the whole thing because so they were like, we don't have any money. And I was like, you'll pay me back, right? Like, yeah.
Do you get that in writing?
That's what you got to learn, dude. Everything. I did not properly get that in writing.
Right.
We should have, we had an operating agreement. We should have followed the operating agreement, but we were friends, and I
Yeah.
trusted they'd pay me back. I even bought one of the dudes a truck when he was out of money.
Wow.
And he was like, I'll get you back in like a month or two. It's been like a year and a half. So that money's gone. But that was the same partner on this whole deal. I'm still crossing my fingers I get some money back from
Right.
it. Like,
Yeah.
but I don't know.
So where did most of this budget go? Was it like permits were super expensive, or like your contractor had no idea what he was doing? Or?
So eventually I went through and like I should have done it way like sooner, but like I was just trusting, like I couldn't picture, because all my other partnerships, like everyone's helping each other out doing
Yeah.
this thing, so I couldn't picture like how it would go wrong. I was young and naive at that point. So it went to just wasting money on whatever, not tracking anything within the project, like literally not tracking anything. I go through and I audit all the books, and they're telling me how much they have left to finish, and I'm like, holy crap, like these numbers are not adding up, like
Do you think
nothing's working out.
they're taking some materials for other projects? Or
I
something?
don't think so.
They just didn't. They undersold what they knew needed to be done.
Yeah, and we did not do proper due diligence on the front end too. And this is on me. Like I should have stepped in too and like actually vetted and thought of it more. So this is like my fault for most of it too. But my mistake was funding like all of it. Like, and then eventually I actually got removed from the debt because it was going downhill. And then left my money in it, and then I'm hoping it gets finished and I get some back, type of thing.
Right.
We'll see. I don't know.
So where is the stage at now? It's like
Still in progress. We don't touch base much with
Yeah.
them because it's just a mess, and like, yeah, just learning about people's personalities and.
Is
Yeah.
it getting closer to being a 4-unit Airbnb? Do you have any idea?
I think they converted to. They ended up doing to something else. I'm not sure even.
Oh,
like,
geez.
yeah, like I don't touch base with the dude anymore at
Yeah.
all. Just
Yeah,
from that.
I mean, that's how you ruin friendships and
Mhm.
partnerships. Like, it's like, all right, never work with you again.
Yeah,
You know?
but
He
the
got a
big.
truck out of it.
Oh, he got a truck on it.
Yeah, right?
Well, and all my other money too.
Yeah.
$200,000. What else?
Yeah.
So but you did learn some valuable lessons from that.
Dude, I learned about like jumping in. I wanted to see someone like, because I would still recommend partnering even after that.
Yeah.
It's buttoning it up and making expectations set on the front end, and then making sure who your partners are. I realized like the personality type that was overconfident in doing the deals and couldn't think of the downsides, like that was the one to avoid. So my mentor Gabe, he was flipping houses, and he'll share the story about how he lost like $2.1 million flipping houses.
Yeah, I think he told that story
at
at
the meetup.
At your meetup,
Mhm.
yeah.
Yeah, so he was telling me like he could see it. He's like, you're gonna lose a bunch of money because of these personality types in the deal. I was like, no, man, like we'll be good. It's gonna go well. He told me not to do it. I did it anyway. And I was like, I should have just listened.
Yeah. Okay. Any other interesting like mistakes or pitfalls that you ran into?
Construction has been the biggest thing, just not knowing, and then yeah, that's been the biggest thing. Is
Construction.
just making sure you're aligning those budgets better. Because I have buddies who do really well at it too, and like actually do that. So if you don't know it, find someone who actually does. Is the thing.
Right.
Like not someone who thinks they does. Like someone who's done a project can show you what method they use, how they track things, and do all that.
So since like construction and redevelopment isn't necessarily your main squeeze, if you're going to partner on something like that, you're going to partner with someone that has a ton of experience doing it.
Yeah, or some at least.
Yeah.
But I could do it way better now, just knowing what I know. So
Right.
like I could go, because I was doing like project management stuff in engineering. So I like, if I would have stepped in earlier on that project, I probably could have done it actually okay.
Yeah.
But like managing now and just learning how to, go get multiple bids, like basic stuff that you just have to do. Like that's really the main thing. Because like where I messed up on a few projects was just like, it just cost more. Like they're still good deals. It just went over budget slightly.
Right.
So that's been the other like downfall with them. But they're deals I would still do in like any day of the week.
I mean, I'd say that these mistakes are what I call tuition.
Yeah.
You learned it once, don't do it again.
Exactly. Yeah.
And you mentioned fire at the beginning. Where would you say you're at with your fire journey? Are you planning on firing? in
Oh,
terms
no.
of Being financially independent, retiring early.
No, so doing deals and like running business and doing all that stuff is just like so much fun. Especially like you guys get to meet like so many cool people probably doing this, and like you can kind of do whatever you want. Like you just the cool part is structuring whatever you're trying to build and then going down that path. So I would say no. Like, and the most people in fire, like they talk about anyone who can actually retire early doesn't end up doing it.
Yeah, you
like,
get bored.
Yeah.
What are you gonna do? Like, watch YouTube all day?
Dude, and I did for like for a period there. I took like 6 months off, and it was just messing around playing basketball every day, like doing nothing.
Wait, don't you still play basketball every day?
No, not in the middle of the day at noon. No.
Oh, okay. It's only at like 5:30 in the morning.
Yeah,
right?
so it's more reasonable. But I was like, yeah. So I took a break there for a while, and then it was just like, yeah, having the structure and like building something is way better.
Oh yeah, way more fun. And so, but you're technically, if you wanted to, you could fire at this point.
Yeah, but I also take on, so like with my personal investments, I stopped going for cash flow. I started going for like leverage plays and equity growth, which takes on more financial stress. So I took a step back in terms of fire, and then upgrade my lifestyle also.
Yeah.
To where I actually need to make money to support investments and pay for projects and do things. But that's with like the bigger picture of like I'm doing value add plays and things. So like I could go backwards. But I don't think of it in those terms anymore. It's more so like, okay, we're trying to like increase the balance sheet and do all these value add plays now, rather than like cash flow. Cash flow is great to like create the opportunity to go do all these things, but like you have to cash flow a lot, like depending on what kind of lifestyle you want to live, and that takes a while.
You seems like you've invested up and down the I-5 corridor a little bit. Do you have a favorite like nook that you like, or that you've been most successful with, or do you just like them all?
So yeah, I like them all. Not all, but like I invest in like most areas, but because what I'm doing is I'm structuring debt packages typically when I'm buying a deal. So it's like wherever that opportunity comes and it makes sense, I will do if I can get management there.
So location is
and
for you it's wrong. More debt, right?
Yeah, it depends on the project too. So like, I mean, I might not go to some areas. Like, if I can get management there and it makes sense as a long-term debt, like, play, like, why would I not do it is what I'm thinking. And so I could be wrong. We'll see in the future. But, like, people invest. The cool part about real estate is people invest with all sorts of strategies, all markets, all across the nation. So, like, some people only invest in, like, markets under 10,000 people that are crappy areas, and they still make money. Like,
oh, yeah. No.
So,
interesting. Yeah. If you were to, talk with a first-time investor who was thinking about getting their feet wet, what would you recommend on how to start, or how to get going on their first one?
Yeah, it's kind of narrowing down what you can actually buy. So for people starting out, it's actually a lot easier because typically you have no money and no knowledge,
right.
But you have a ton of time. So it's like most people, it's like house hacking, or go buy a house, live in it for a year, move to the next, or use like a 203K loan, fix it up, do that thing. So for newer investors, it's really just figuring out which one or two strategies you can do, and then find the opportunity that fits. Once you start learning all this information, like, and you have a ton of doors, it actually gets harder because you start getting like shiny object syndrome and trying to do all of it at once.
Yeah.
Right.
So like that's where I ran into, and what we're working on now is like we learned how to structure so many deals where we waste so much time looking at deals. They're like, why are we even looking at this? Like, just, it's a waste of time. Like, focus on what you actually want to buy, and then go down that path.
Find your box, and then just keep hitting it.
Yeah, and then once you do that for a while, you can, go expand and go from there. But for new investors, it's pretty easy, honestly.
Oh,
like,
yeah.
So either if you can qualify for a loan, go buy that house, do a house hack, live and flip, that type of thing. Or if you can't, get a co-signer. If you can't do that, find someone who will partner with you.
And what would you think? What is the littlest amount you've seen someone do with like a partnership or something?
Littlest amount of money?
Probably
yeah,
zero.
like lowest amount.
0%, zero down.
Dude, I have a buddy on the East Coast who got paid $10,000 to buy a house. He got paid $10,000 to buy a house.
Because he structured the whole thing basically, and he got a cut.
So no,
let's hear this.
Well, yeah, he structured it all, but it was a creative deal. Like, they would have had to write a check again to sell the home.
Oh, back to the same
yeah. So he
situation
negotiated. They pay him $10,000 to take over the home. That cash flows.
Oh, nice.
Yeah. So he got paid to buy it.
Amazing.
People are gonna hear this and they're gonna ask me for that deal.
Sorry about that.
No, I'm just kidding.
Yeah, and he has all those deals available for you, so keep calling him for them.
We'll see about that. Oh, you're trying to waste my time. Well, I was gonna say, if people are looking to get a hold of you or get in contact with you on social media, how can they find you?
Yeah, so I'm on Instagram at thow_5, maybe just thow5.
We'll link it.
You can like Trevor Howard. You'll probably find me there. You can check us out on like vestasolutions.net. We have our emails and contact info on there. And yeah, we will meet with anyone. We love to pay it forward, kind of give
I'll
people
pass you
info.
all those people that you just.
Pass them back. Except for those people, you got that.
Oh man, well thank you so much, Trevor. We really appreciate it.
Yeah.
Okay, thanks, Trevor.